What people miss, now I still don't understand why it's so hard. Bitcoin is the best savings technology that's ever been invented. Full stop. It's money that doesn't devalue. It actually is deflationary instead of inflationary.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Mark Yusko shares his new prediction for big companies adopting Bitcoin in their balance sheet. He also shares his prediction for Bitcoin in the next 12 months and more. So without wasting any time, let's dive into the video.
It's the best saving. Now, when do you spend your savings? Not never. Not never. You spend it when you have a big expense, right? You want to buy a house. You want to send your kids to college. You want to take a vacation. So this whale that bought it at, I think it was like 70 cents or something, no, 50 cents. And he held it all the way to 70,000 and sold 1,000. It was like, oh my God, it doesn't have diamond hands. Like, what are you talking about? Yeah. At some point, you need to replenish. The way you have to think about it is 3 buckets, right? We all have a liquidity bucket. 10 to 15% of our wealth that we need to spend for our lifestyle. Then we have a get-rich bucket, right? 10 to 15%. That's for all the crazy ideas, the brother-in-law's condo deal, the hot stock tip you got from your friend. You're going to lose all that. So just keep it small, but that's fine. And then you have your savings bucket, and that's 70 to 80% of your wealth. And the boomer approach is 60-40, 70-30, diversified portfolio, stocks and bonds. Well, now this incredible asset, digital assets, has come along, and now you can diversify into those things. And you could even say, well, with Bitcoin, I could swap that whole portfolio into Bitcoin. Fine. You want to do that? That's fine. That could be your savings. But here's the thing. That 10 to 15% in your liquidity bucket, there's a hole in the bottom. It's going to drain. So you got to keep replenishing. And as the Bitcoin keeps to appreciating, because remember, Bitcoin doesn't grow. It's the currency that's getting worse, or the demand is rising, right? Supply and demand. And I don't see why that's so hard. And I don't see why people look at it as a negative if you take some of your savings and spend it. That's how life works.
Reporting from CoinShares highlighted a weekly $435 million outflow from cryptocurrency investment products in the week ending April 26. Crypto exchange-traded products, ETPs, have now experienced outflows for the 3rd consecutive week as Bitcoin price remains range-bound in the low $60,000 range. Bitcoin funds led outflows, with $423 million exiting the market after the halving event, while Ether investment products also experienced withdrawals of $38 million, marking their 7th consecutive week of negative flow. Solana and Litecoin ETPs experienced deposits, posting net inflows of $4.1 million and $3.1 million, respectively. According to CoinShares, the negative outflows are likely due to deceleration in inflows from new issuers, which saw only $126 million in inflows last week, compared to $254 million the week prior. Data from Farsight Investors reveals that BlackRock's Bitcoin ETF, IBIT, recorded 0 flows for the first time last week. The other issuers have experienced various days of 0 inflows over the last few weeks amid decelerating outflows from Grayscale's GBTC. The negative outflows are likely a result of investors' concerns about U.S. stagflation, a combination of slower economic growth rate and sticky inflation, further weakening the probability of the Fed rate cuts. According to the CME FedWatch tool, traders are placing the odds of a June rate cut at just 11.3% at the time of writing versus 44.8% for September and 43.8% for November. This means market analysts are betting that the U.S. Federal Reserve will hold rates steady in May and June, with the first possible cut being later in the year.
I've been tweeting about this week. So I have recently invested in one such corporation, a Japanese corporation called Metaplanet, and myself and Jason Fang and a number of others. So Simon Garovich has run this company for a number of years, and he realized that the issue is worse in Japan than it is in the U.S. because the Japanese yen has been on a one-way downward path since 2011. It went from 85 yen per dollar to 152.7 this morning. I mean, it's just brutal. And he finally said, you know what, we're going to take a page out of the Sailor playbook or MicroStrategy playbook. And when a play works, you should run it. And to your point, lots of corporations in the United States who are sitting on these mountains of cash, Buffett, for example. But Buffett's never going to do it, right? Because he calls it rat poison squared. I'm like, what does that even mean? And how do you even know what rat poison tastes like unless you're a rat? No, I'm just kidding around. So yes, other companies are going to do it. It'll be smaller, I think, at first. And there's probably some that have done it, but they don't really want to talk about it because if it doesn't work, and you can't have a short time horizon for this. You have to have a long time horizon, and you have to have the ability in the company to access capital markets to grow. And I think that means you have to have good reach and good relationships. So and good management. So I think, not every company should probably jump right in if you don't have people who are well-versed in the segment.
Analysts at brokerage firm Bernstein say that the slowdown in spot Bitcoin ETF inflows is not the beginning of a negative trend, but is a short-term pause before BTC resumes its bull run. In a note to clients, Bernstein analysts Gautam Chugani and Madhika Sapra wrote in a report, "We don't expect the Bitcoin ETF slowdown to be a worrying trend, but believe it is a short-term pause before ETF become more integrated with private bank platforms, wealth advisors, and even more brokerage platforms." The analysts emphasized their $150,000 cycle target for the Bitcoin price by the end of 2025, citing unprecedented ETF demand, which has seen $12 billion of spot Bitcoin ETF net inflows since their market debut on January 11. A new report by Econometrics asks its readers to watch out for a pivot in the financial conditions that could make or break the Bitcoin bull market. The report explains that while spot Bitcoin ETF opened up a new source of demand, turning macro winds and the failure of the U.S. Federal Reserve to control inflation could trouble the bull market. That could cause a retightening of the financial conditions, and this would create a headwind for the bull market. According to Econometrics, the Federal Reserve Bank of Chicago's National Financial Conditions Index, NFCI, which measures the level of tightness in the U.S. financial system, is stalling and is at the same level it was in 2022 when the rates started hiking. As the chart above reveals, the NFCI is stalling, which is a possible explanation for why risk assets, such as Bitcoin, are bearish, Econometrics explained. If it just stays at that, then we are simply experiencing a pause in the bull market. But if this is a pivot in the financial conditions, the bull market would be in trouble. There is a potential positive catalyst next week as the HKBTC and ETH spot ETF begin trading. Interest is growing in what could be a gateway for the inflow of Asian institutional capital, QCP wrote in a note over the weekend. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.